Hi, good morning, everyone. Welcome to the One Good Trade live show. If you guys can see and hear me loud and clear, just type a GM for good morning. Let me just acknowledge all of you for joining us today. And we have a very, very special guest today, Jamie from Macquarie. They'll be joining us as well. But let me know, guys, if this is working. Type a GM for good morning. Hi, good morning. We have hi, Gilmer. Good to see you here as well. Good morning, Linda. Hi, ABC. Hi, Mother as well. Hi. Let's see who's joining us here today. Right. Let's just help us to like and share. Help us to like and share, guys. That will allow more people to join us. Right. To join us today. And of course, you will be able to, if you have not yet followed yet, go ahead to do that, so that you will not miss out on when we go live in the future as well, when we go for this One Good Trade, or even my Friday weekly Ask Me Any Stock session. So today, I have a very special guest, and Jamie here with me. And okay, maybe Jamie, maybe you can introduce yourself a little bit. Maybe I can pass on the mic to Jamie before we talk about today's session.
Hi everyone, good morning. Good to see all of you again. My name is Jamie. I'm the head of the Singapore Warrants desk in Macquarie, and very pleased to do this show with Joey. This is unfortunately our final One Good Trade live show for 2025, thank goodness, and then hopefully we'll be back to see you in 2026. The last time I met some of you was on the 28th of October, where Joey and myself, we were teaming up to talk about a few stocks, including the likes of CityDev. So if you followed us, and potentially followed the CityDev shares, well, again, what some of Joey's predictions did manifest, and if you had traded warrants with that view, hopefully you're one of those who made some money. But before I go on, just want to say good morning. And Joey likes to clear this up, that it's not his Ask Me Anything show. This is the One Good Trade. So rather than ask Joey anything, let Joey tell you that one thing, right? Because, there's so many shares that can be on the radar, but time is precious, and so is our ability to focus. So we try to just narrow it down to that one good trade that you can focus on from now until the holding period that the warrant permits. And then of course, with every show, for those who missed out, we will always do a recap, so you don't have to be so formal about things. You will get to know exactly what you missed out on. And without further ado, I shall just quickly introduce the idea that Joey talked about just last month on the 28th of October. So if I can share my screen now, this is the page on our website, warrants.com.sg, where, if you had missed out on the previous show, obviously you can Google One Good Trade, and then you can watch it on YouTube yourself. But we also have it all here on our website, all the One Good Trade shows that we previously did with Joey. And on the 28th of October, we actually talked about this trade in CityDev, where Joey shared his view that, a good entry level would have been above 750, where there was confirmation that the stock was going to head higher, potentially broke above the resistance of 750, and potentially could progress towards $8 or even $8.50. Now, failing which, if it couldn't break above 750 and it just started to trade downwards from there, we also talked about the possibility of using a CityDev put warrant to hedge. Okay, so the entry level will have been around 750 or just below, and then you exit around 695, 692. Now, what happened?
I shared the stock of CityDev for a while before maybe we talk about CityDev. Would it be
Sure.
better? Okay,
Sure,
maybe just quick one. Okay, just a quick one. All right. Okay, so just to give you guys a very quick summary of today's show, right? Like Jimmy mentioned, every month we try to go live in this show called the One Good Trade live show. So this is different from my Friday weekly Ask Me Any Stock show, where I go live with my team, Bervin and Z, and some of the other teammates as well, whereby we cover the stocks that you guys are asking about. So today will be where I will share with you guys one top Singapore stock. Maybe you do a quick refresher of the previous stock that we covered with Jamie in the last session, right? Then later I'll share you guys one Singapore stock that you want to put in your watch list to potentially position yourself in. And of course, Jamie will give her take. So today we have Jamie, a very special guest, joining me every month, and she's an expert in warrants. What is warrants? What, of course, Jamie will share more about it later. But more importantly, how you can actually increase, right? Potentially increase your ROI, all right, with the stock that I talked about using warrants. Cool. All right. So that's exactly what Jamie will talk about as well. All right. But let me just go ahead to just share very quickly. All right. Just a quick disclaimer. Whatever that's being shared today is just for education purposes only. So please do your own due diligence, right? Not really asking you to buy or sell anything, but just give you guys a little bit of an idea of some of the stocks that we're looking at. And also, the process, the flow, what goes through our mind, the strategy that I'm using as well. Of course, Jamie will come in to give a take on how warrants can be utilized as well. All right. Okay, so let's go ahead to maybe pull out the charts for CityDev, right? City Development right over here. There was a stock that we covered, I think, end of October, if I'm not wrong, with Jamie. All right. And we started to push up a little bit of profit taking. So I thought, why not just go through it very quickly first before Jamie kind of like chime in again on using warrants. All right, on CityDev right now. Okay, let me just quickly pull out CityDev right over here. So this is CityDev, City Development. All right, the code is CO9, and the price is about $7.17 right over here. So you can see that for CityDev, right? Well, I would say since June we have been a very good uptrend. We broke certain resistance like the $5.50, $5.20, and there we go. The rally really started all the way up. Long-term trend is still up, but you can see that over the past 1-2 weeks, well, we have seen the short-term trend, right, from going up since July, up. Look at the green line, right? The green line is the 20 days simple moving average. So it's up. But over the past 2-3 weeks, well, of course, the market weakened a little bit. Then you can see the green line actually started to flatten out, maybe point down a little bit. Does that make sense? Well, all right. So this is City Development. Now let's go to turn on what we call the One Good Trend Pro indicator. So if you have been following me for a while, guys, I've been using this strategy that I call the One Good Trend strategy. In short, it's 1GT, right? For more than 15 years now, we have a tool right over here that just allows us to get an opinion on any stocks, any asset classes in seconds. Not just CityDev, it could be any Singapore stock, any US stock, whatever. All right, get an opinion in seconds whether to buy, to get in, or maybe to get out. All right, so let's turn it on and see what it says very quickly. This is the One Good Trend Pro indicator. That's what we call bullish and even bearish signals that comes out with a click of a button pump. And there we go. So you can see this is CityDev, right? I'll not go too far, but previously in like beginning of 2025 or maybe last year in 2024, well, you don't want to buy because we probably wouldn't ask you to buy then because there is what we call bearish signals coming out. Red bearish, and look at it. Right? There we go. We went from like about 520 all the way to 450. Right. So if you buy in, you get stuck, lah. Right. So you don't want to buy. You want to buy when there are confirmations of a reversal. All right. And that actually came somewhere in April. Right over here, we got a 1GT bullish signal coming up, the first one, all right, the second one, the third one, and went up even faster. And over the past, I would say, few months, well, we got 2 more 1GT bullish signals. So it still looks okay, but just that we are kind of like taking a breather and consolidating sideways at these 2 key levels right now. So let me just point to you these 2 levels before I pass on the mic back to Jamie to cover what could you potentially do. I mean, in terms of warrants, right? So very simple. You can see that right now, City Development is consolidating from the key psychological $7. So $7 was a resistance level, right? Since August, you can see we touch it, came back down, touch it, came back down in September, but finally, bam, we went above $7, right? That was in like October, right? Last month. And then we go all the way up, down, and it seems like we are, after breaking $7, we are back to this consolidation phase from $7 to $7.50. 50 cents range. Very easy. You can see it's like going up and down, up and down, up and now down. I don't know whether to go up and down, up, down. Okay, that I mean, it's the range right now, right? From $7 to $7.50, right? So if you're looking at a potential entry, well, I would say that anything above $7, I could turn on the trailing support just to get another confirmation. You can see that this trailing support line, right? They've popped up since April. It followed City Development as it moved higher, all right, from $4.45. Yeah, follow. So as you follow, it give it space, lah, right? Don't follow too closely. Give it the space to breathe, the allowance to move freely while accounting for the volatility. All right, so you can see follow. 440 follow until now $7. Right? Are we still above it? Yeah, In fact, we are still above. You can see this is the line right over here. It's right over here at about $7. Does it make sense? About right. So this is CityDev, right? We are fortunately still consolidating above the trailing support level that we have given it space to breathe, to stay above, hopefully. So, as I say, I also drawn this horizontal support that coincides with the trailing support line. It's another confirmation. So my take is very simple. As long as we stay above this, $7 psychological support level, well, I would say that still looks okay. All right, the range is 7 all the way to $7.50. In order to see more upside, well, we need to get past the 750. All right, if that breaks, I think we might even see a new 1 GT bullish signal like we've seen over the past 7 months. That could lead the next rally all the way to $8, $8.50, another upside. But right now, I think, of course, market is a little bit, taking a breather, a bit of profit taking here and there. So that is pretty much the sideways range right now on city development. All right. So now that you guys have a better understanding of city development, right, in terms of the support, what are some of the levels we could see selling again? Maybe now I can pass on the mic back to Jamie to give a take on how, based on these details, this information, or these key levels, how could you actually use warrants? Maybe you take a long position, or maybe to take a short position if it hits the resistance, right? A put option as well. So Jamie, back to you.
Yeah, thanks. So just as a recap, what warrants we have done. But before that, I just want to say, with warrants, you really want to use it when you think the stock is going to move. So when with Joey saying that, it looks like it's consolidating, even though the uptrend is intact. Unfortunately, when it's just consolidating and it's trading in a very tight band, what you're going to find with warrants is that you're actually going to lose money, because unless the stock got volatile and, moved, in a big way, whether on the upside or on the downside, you'll find that there is not enough movement in underlying to fire up the effective gearing that will in turn help you gear up your return, so to speak. What do I mean? I'll just share my screen. One of those warrants we talked about in the last show, and Joey first shared his view on CityDev, was this call warrant called SCEW. Are you seeing my screen now?
Oh, good. Go ahead.
Yeah.
Yep.
And what you're going to see is that with CityDev just, moving in this narrow range where it hasn't broken above 750, it hasn't broken below $7, let's say, over the 1 month period, you would then have incurred a loss of 33%, where if you had bought the warrant at 6.1 cents, it's currently sitting at a loss of 4.1 cents and down 33%. Why? Because CityDev shares are down about 4% from your entry level. But like I said, this is because you entered into the warrant and you want to take a bullish position on the stock, even though it hadn't broken above 750, which was what we also talked about in the last show, where you only enter on that confirmation. So in that case, if you had, let's say, bought the put warrant, which we also discussed during the show, KBPW, what would have happened? Okay. In this case, again, it failed to break 750, and I thought, you're a current shareholder and you want to buy the put warrant just as a hedge, because one of those levels we talked about covering the put warrant at was around 695, 692. And indeed, on 5th November, CityDev actually came down in just about a week's time, 8 days. It went down to about 692. It went to the exact level. Of course, what we're using here under the historical performance on this website to measure the warrants is the end day close, and it closed at $7. But during the day, it actually went below to 692, which was when you could have exited the put warrant. But let's say, exited based on day end, what did the warrant do? Now, put warrants increase in value when the underlying shares come down, which is why it's great to hedge with, right? If you're worried about the share price taking a knocking in the short term because you're long the shares. Now, in this case, the put warrant would have gone up by about 5 times more than CityDev's 6.2% drop over the 8 days after we did the show. And the put warrant gained from 2.5 Singapore cents to 3.3, which is a 32% gain. So this is an example of how, you could have used a put warrant to hedge against a short-term pullback. And like Joey said, the uptrend is still intact, right? It's just consolidating. So as a shareholder, you probably don't feel the want to exit from the shares yet because you think there could be more upside. But if you had used this put warrant, you would have been able to cover your 6.2% loss on your portfolio on the CityDev shares with this 32% return. Okay, so this is an example of how the put warrant worked in the last month. Since we did the show, if you have bought the call warrant, even though the signal hadn't come in, you will have seen an example of how the call warrant would also have magnified your losses. So this is really, how warrants work, right? And why they're attractive, because of the ability to magnify, because of the ability to hedge on the downside. And lastly, what you have noticed is that the warrant prices cost a fraction of the underlying price. So the amount of capital outlay would really just have been a smaller one, a fraction of it, okay? So there's an example of how the CityDev call and put warrants work during this period since the last show where Joey covered CityDev shares.
Yep.
And now that you've got his refresh outlook, I think the one question we really want to ask Joey to touch on is really, Joey, what's next? What is the next one good trade for us to look at from now until the end of 2025, or at least until the next one good trade live show?
All right, thank you so much, Jamie. All right, for sharing a little bit on warrants, on city development, and it's not just about call warrants just to buy, right? So I think Jamie mentioned a really good point. You could also take what we call a put warrant position to in case of some short-term downside weakness, you could actually buy a put warrant to protect or to hedge the downside, right? So do check it out, right? Warrants, the link is right in the chat. You can go to Jamie's webpage, Macquarie Warrants .com.sg, and that's where you could have more details on warrants. But now let's move on right now as to the new Singapore stock that I'd like to share with you guys today. Okay, let me just go to share my screen right now. So we talk about city development, right? I talk about the support being at $7, $7 to $7.50. We are pretty much moving up and down, sideways, taking a rest. Nothing wrong, right? Stay above 7. We are cool, right? If you go below 7, then you want to be careful. That's where we would have a bearish signal. We could really see some selling coming back, because after 6-7 months, we've been above the trailing support. So if you go below it, not so good. Thankfully, we are still above it. Now it's what, $7.16. Still above, so still okay. Okay, so now let's go ahead to talk about the Singapore stock. So as I say, right, this one good trade live show with Jamie that we do every month is where we're going to keep it simple, right? It's not about covering like 10, 15, 20 over stock that you guys are asking about, but to keep it simple, and I'll share with you guys one Singapore stocks each time, all right, that you could potentially position yourself in, all right? And today, the stock will be none other than this company. I think some of you may have heard me talk about it over the past few months as well. And okay, let me just go ahead to close this off before I bring up the stock. And that will be this company called Sheng Siong, right? Let me just go ahead to pull out Sheng Siong right now. And the code would be OV8, Sheng Siong, right over here. So Sheng Siong is one of, those of you who have been, if you're in Singapore, you probably know about Sheng Siong, NTUC, and that's where you buy our groceries. That's where me and my family go to every weekend as well to get our vegetables and all that stuff, right? So Sheng Siong, right, one of the consumer plays, very strong. I would say one of the top performing stocks in the Singapore market since like easily April, May, June, right? We've gone up quite a fair bit. People have been talking about it being, it's gone up by a lot already. It's probably not going up, but there we go. We have gone to another phase. There could still potentially be more upside, especially if those support levels that I talk about are still holding. Of course, Jamie will come in later as well to add her views on how one could to take a position on warrants to potentially magnify the returns, all right, on Sheng Siong. Okay, but now let's go to talk about Sheng Siong over here. So you can see for Sheng Siong, right, since actually last year, right, if you have been a client of mine in Philips Securities, that's where we actually send out some of those updates, ideas by WhatsApp. So if you want to get some of those ideas much faster by WhatsApp, guys, check out the link. Is right in the chat already. That's where I think we have many clients joining us as well. So this is where I think we have sent out a few WhatsApp on Sheng Siong over the past few months. It's gone up from $180 to $2, $250. Now it's like $269. All right, so check it out. Link is right in chat. If you're not yet a client of mine in Philips Securities, find out how you could do that to get some of our ideas by WhatsApp daily for free, right? At no additional cost. Okay, now, so Sheng Siong right over here, long-term trend, you can see that the rates and the blue line, the 100 days moving average and the 200 days moving average, both of them has been pointing up since last year. right? So the longer term trend has been up since last year. Not last week or last month, very, very long already. Actually, like almost now it's almost Christmas next year already, right? So since last year, we have already gone into a very firm longer term uptrend just by looking at the rate and blue line. Of course, in the short term, we look at what we call the green 20 days moving average line. And sometimes you can see the short-term trend, and see over here, right? That is where the short-term trend actually went sideways. Look at this, right? Very boring. The green line is flat, right? So that was like in December last year, all the way to March this year. For like 3-4 months, it was very boring. If you tell me then, I'll probably say, wait, first, like, I don't know what it's doing. It's just going sideways, right? That was where short-term trend was sideways, but longer-term trend was actually up. So what we're going to do is we're going to wait for a confirmation whereby you can see the green line starting to turn up. Does it make sense about? Right? And there we go. What happens? We turn up, we broke the key resistance. That's another confirmation. The rally actually started really firmly, I would say, in April, right? Somewhere beginning of April. There we go. From 160 to 180, 190, $2 broke as well, and all the way up, right? And over, I would say, August, September, well, we saw the green line also, right, flattening out again, right? Something like what we did last year, right? Or in March and February, right? Same thing, the green line flattened out while we were taking a rest below the $2.20. So we're kind of like consolidating from $2 to $2.20. Same thing, like taking a rest over here 2-3 months, like we did from December to March, right? Which is okay because, in the short term, we're just resting for a while, going sideways for 1, 2, 3 months, right? However, if you look at the red and blue line again, it was still up, right? The long-term trend was still up, right? So it's a matter of time. I mean, if the short-term trend turned up, if we break the $2.20 resistance level, and did we do it? Yes, we did. Of course, I sent out a note, got my team to send out a note by WhatsApp to our clients as well. And when that happened, right, we broke a key resistance level. This short-term trend also turned out. Look at the green line. I mean, it was like, starting to point up a little bit, right? And there we go. It really started to slope up, all the way up, right? So we broke 220 and started to push even higher. So that's the reason why, Sheng Siong came back to my watch list since like, mid of October last year when we broke the $2.20. So we have gone a little bit higher, right? From 220, 240, 250. Now it is about $2.70. I'm not too sure whether it will really go back down for you to buy, because you can see that each time it moves up, it consolidates at a higher support level for a while, 1 month, 2 weeks, maybe sometimes 2 months. We break the resistance and we go even higher. Does it make sense about, right? So that is Sheng Siong, right? It's a very gradual, very steady uptrend, not just in the longer term, but also in the short term. We consolidate, we move higher. Make sense about, right? So let's take a look at what is happening right now for Sheng Siong. But before I do that, let's go ahead to turn on. As I say, right, this is Sheng Siong. I've just done some manual analysis, right? A bit tedious, like I've explained to you guys a little bit, right? But if I actually want to save time, right, and that's what I do, that's what my team does as well, right? We can actually turn on the 1 GT or the 1 Good Trend Pro indicator. As I say, this indicator pretty much allows us to get an opinion on any stocks in seconds. All right, it is pretty much formulated by the 1 Good Trend strategy that I've been using for more than 15 years now. And my forte is in stocks, but you can turn it on any asset classes, right? Whether it's FX, Bitcoin, crypto, whatever, doesn't matter, right? But my forte is in stock. Is mainly optimized, for a daily time frame for stock. So it's a bit of a swing to position trading strategy. But let me go ahead to show it to you. Turn it on. You can see right over here. If I turn it on, off, and what happens, right? So basically, it gives you an opinion on any stocks, any asset classes in seconds. So if you turn it on and you see a bearish red color signal yesterday, then and please don't go and buy lah, right? Just be a bit more cautious, right? But if you see not 1, not 2, but a few bullish signals, pump, right? Pump, right? Pump. There we go, all the way up. I know how many percent from the very first bullish signal that came out in April? 67%. All right, in about 7 months, right? 7-8 months. 67%. And it's just the underlying stock. We don't even talk about warrants yet, in terms of ROI increasing, how you can magnify your ROI. This is just the underlying stocks. Of course, Jamie, when Jamie comes in later, Jamie will talk about warrants, right? And it will not be 67%, right? If you have got in then, right? It'll be much more than 67%. Because if you have used warrants to magnify the gains as it moves up, that's where your returns could be much more, right? So I'll leave that to Jamie to talk about it. But let me just zoom in right now into Sheng Siong as to where we are right now after talking about the bullish signals. So you can see 1, 2, 3, 5 bullish signals. There we go up. Recently, as I say, right, we broke the $2.20 resistance, and that triggered another 1 GT bullish signal. That's another confirmation. And there we go. The green light, as I mentioned, also started to turn up, right? So now let's zoom into what has happened over the past 1 to 2 weeks. But I would say that right now, right, we are taking a bit of a rest in the short term, which is fine, right? I would be happy if you take a rest rather than keep on going up. You want to be careful, right? But you can see for Sheng Siong, you take a rest for 1 week, pump, 1 week, pump, 1 week. So it's healthy. It's healthy. It's a sustainable uptrend that way, right? If you rest, take a little bit of a consolidation, right? Then it attempts to break the resistance to push even higher. So what would be the support level right now over the past 2 weeks? Well, let me quickly draw this for you. I think the support, I would say, would be about 265, right? $2.65. Seems like, yeah, I mean, it used to be at 260, but I think not even 260. I think now, past 2 weeks, seems like 265. Some bargain hunting is starting to come back. In fact, today, the low is about 260, about touch 265, started to rebound. All right, now it's 270 already, right? So I think 265, even today has been proven as well. 265 support level. Resistance would be, to keep it simple, 273, 274. Let's just put 275. I mean, just give a bit allowance. So the range is 265 to 275. I think it looks good, all right? We have been getting bullish signals coming out. The long-term trend has been up since last year. Green line, we can take a look. Well, obviously still pointing up, not too bad. We can also turn on the trailing support and resistance, this level, right? They give us an idea if we are above the trailing support. If you're above, that would be another confirmation. So you can see the trailing support that's popped up since April. Follow, giving Sheng Siong the room to breathe. And of course, Sheng Siong has been above it since April, right? From $1.50, follow, up, flat, follow, 150, follow, until now it's 250 already. All right, are we still above? Yes, we're still above. That is another confirmation. So you can see that for Sheng Siong, right? Well, the trailing support is slightly below the horizontal support at $2.65. Why is it slightly below? Well, as I say, right, the trailing support gives the stock space to breathe. See what I'm saying so far, right? So there's some space below it, below the price, and the trailing support right away. So you can see there's space, right? You don't follow too closely, give the stock space. So as long as you're above the trailing support, which we are still above, all right? In fact, we're not even going near that, right? As I say, 265 seems like some support is already coming out, seems like some buying pressure is already coming out. But to give you a bit of allowance, well, anything above 265, even better. But you can give it in terms of the volatility space. Well, I would say anything above 255, that will be giving it a bit more space. As long as stay above it, I think the uptrend still looks very intact. All right, so let me pass on the mic. To Jamie to give a take on Sheng Siong right now. So how one can potentially take a position on Sheng Siong using warrants, all right, to potentially increase your returns. All right, Jamie, back to you.
Thanks, Joey. Well, one of those comments Joey made previously was, Sheng Siong has gone up like 67%, right? So how have warrants done? And I also wanted to just take the chance to also answer Kuna's comment, which is that Sheng Siong's price is not very volatile. Is it ideal for warrants? Now, first of all, volatility really means the magnitude of the move. So it can be very trending, but in a way, it's also volatile because the uptrend is strong, it's violent, right? And so what we're really talking when we talk about volatility, it's the magnitude of the move, right? If it's upward trend, it's also considered volatile because it's not moving, like 0.5%, 0.3%, up 0.5, down 0.3. It is moving like, you've got those moves where it's up 67% over, over pretty much most of the year. But in our case with Sheng Siong warrants, if I can just share my screen, we listed our very first Sheng Siong warrant only on the 14th of July. And so we do not have performance prior to that. But more importantly, we did a one good trade. No, actually, we didn't do a one good trade live show, Joey. We did a SGX commentary where you wrote a commentary on Sheng Siong. So if I can just share my screen.
Go ahead.
I think it's still showing your screen right now, is it?
Your screen is showing. All good. Go ahead.
Okay, so if you can see my screen here on the 30th of July, we actually posted a reminder to say, hey, we published Joey's view on Sheng Siong shares on 25th of July, right? And the warrant we talked about back then, we only had one warrant, no put warrants, only one Sheng Siong call warrant. It was this warrant called KCKW.
Yep.
And then we're like, have a look at Joey's view because he was very bullish at that point in time. Of course, given the the specific support and resistance levels, just as he has just given you today. And then have a look at the warrant. Now let's have a look at how KCKW has performed since 25th of July, right? So I'm just clicking into the historical performance tab. The warrant is KCKW. Okay, so it got listed on the 14th of July, but Joey talked about it on the 25th.
Yep.
And what you're seeing is Sheng Siong going up by about 26% since then. Of course, not as much as the 67% that Joey talked about, but that required entry level below $2, right? But at the point when he talked about it, it's still up an impressive 26%. But what would have the warrant done for you if you had used it to long Sheng Siong shares instead? Well, in this case, if you are still longing it because it's still looking very strong, uptrend intact, as Joey said, this warrant would have gone up by around 6 times more over the last 122 days, right? After over the last 4 months, basically, the warrant would have gone up by 165% from the initial entry of 1.7 cents to its current 4.5 cents. Okay, in fact, Sheng Siong is one of our top performers over, we only have 12 weeks, of course, which is the last 3 months. Sheng Siong, call warrant, KCKW is the top performer over this period. And you can see, it's up 291%. So again, ladies and gentlemen, this is gearing at work. And this is why you might want to consider using a warrant because it really can amplify your ROI. In this case, look, 32% over the last 3 months is very impressive, right? But you would have been able to magnify it by about 8 times more using call warrants over Sheng Siong. Okay, but never mind if you have missed out. It's all the past. How about we want to start all over again? As Joey has mentioned, Sheng Siong is his one good trade idea, but of course there are premises, right? He's basically said we want to watch out for the break above 273, 272, 273. So let's say if we want to enter around 275 in the stock, what warrant shall we pick? How will the warrants perform, right? We're not interested in historical returns anymore. We want to look forward. In that case, I have a tool called the warrant selector tool and also the calculator tool, but I'll just use the selector tool because there are different Sheng Siong call warrants at this point. And ultimately, we want to look for the best warrant on tight spreads at this point that will magnify our returns if our view was right, in the best possible way. So to use a tool to select a warrant over any underlying, it's called the warrant selector tool. Under the warrant tools drop down, it's very simple to use. To select a warrant, there are essentially only 4 steps. One, have a view on the underlying because you really are just using the warrant tool as a means to an end to amplify the move of the share. Of course, you can always directly buy the shares, but if you're interested in just taking a shorter viewpoint because you think the move could be quite big in the short term and you're interested in using less capital, then you can use warrants. But the view, the support, resistance, cut loss levels you have is on the underlying directly. Okay, so in this case, we have a view on Sheng Siong, right? And we choose it, we're bullish, we choose a call, and currently is at 269. Not quite the price we want to enter at yet, right? We want to enter maybe around 275, where we think it could be a good entry point where it's climbed above the resistance, the immediate resistance level. Now, in this case, once you enter 275, the warrant prices will update to its price today if Sheng Siong were to go to 275. Okay, so in this case, this one warrant here, Q73W. Now, why is there only one warrant? What happened to KCKW? Basically, this is the only warrant that is on tight spreads, quoted on tight spreads now. And in this table, we only show warrants quoted on tight spreads. Why? Because it's the most cost effective. Now, warrant like KCKW, previously we highlighted magnified gains and all that, it's getting a bit short dated, meaning it's going to expire soon. It's also seen its delta climb by a lot because, from the time we talked about, Sheng Siong shares on the 25th of July, when Joey, not on the One Good Trade show, but in a written article, he talked about it and mentioned the warrant. It's climbed up by a lot, right? As you can see, 290%. So in this case, that warrant probably not the best to use at this point, when Sheng Siong is much higher compared to back then. So this is the warrant to look at. There's only one warrant to look at, Q73W. We want to see how it will perform if, let's say, Sheng Siong rallied to $3, which is our upside. If it broke above 275, right? It's our target exit level. Why? Because it could be the next resistance level that to look out for. Okay, in that case, it's 9% higher from 275. How will the warrant perform? I think that's the most important question, right? In this case, we increase the number of weeks, okay? And straight away, you will see the simulated returns produced and generated by this warrant selector tool. In this case, what this table is saying is that if Sheng Siong were to go up 9% in 2 weeks' time, this warrant will go up by 57%. Okay, but because of the ability to magnify your returns, because of the lower amount of capital outlay required, what gives, right? That should always be a question. This listed leverage product sounds really good. What's the catch? Now, all listed leverage products that magnify your gains, or even unlisted, right? They will always come with a holding cost. In the case of warrants, what is this holding cost? It's called time decay, whereby the longer you hold on to the warrant, the lower the value of the warrant, even if everything stayed constant, even if the stock stayed constant. Now, in this case, I've just increased it to 3 weeks. Can you see that the return has immediately gone down from 57% to 50%? Now, this is time decay kicking in, okay? This is time decay kicking in. Now, so the longer you hold on to it, the less return you're going to see. And we want to keep increasing it to a point where we know it is no longer a good product to keep holding. Why? Because the magnified returns produced is not going to be that much more compared to the shares. So in order to simulate that, we keep increasing the number of weeks. Can you see in 9 weeks' time, the percentage gain of the Sheng Siong warrant has now dropped to 36%, 35.7% to be exact, right? It's down from 57%. So this is time decay kicking in, right? In this case, this warrant expires 30th of June. So 9 weeks is 35.7%. But we want to know how long can we have this view of Sheng Siong going up from 275 to $3? How long a window do we have if we wanted to use a warrant? Of course, if you buy the shares, you can let the window be, 10 years from now. But with warrants, we're really interested to magnify the short-term volatility, the short-term trend, right? So we want to solve for the maximum holding period. In this case, we keep increasing it, and we'll see that by the 16th week, which is 4 months from now, this warrant is only going to generate you returns of 14.3% versus the 9.1% return in the stock. So there's actually not much gearing left, right? In other words, with this warrant, you probably don't want to hold on to this view for longer than 4 months, right? If we wanted to know the exact date, right, or which we should be looking at, what are 16 weeks from now? In 4 months, is it February, right? Is it January? Some of us, we can't do the math. So don't worry. In that case, if you don't like to estimate in terms of weeks, we do have another tool called the calculator tool. How do we access it? You can either click on the warrant code, okay, and it will take you into the live matrix page, but internally you can go to the calculator page, right? In this case, we already have this warrant Q73W. We already know that's the warrant we want to look at. We can tap on the warrant calculator page. But otherwise, you can go to the warrant tools drop down, and the calculator is found here as well. Okay, so back to this Sheng Siong warrant Q73W. In order to use this tool, the calculator tool, you need to already know which warrant you're interested in, because it will only simulate for the specific warrant. So for example, if you're looking at previously KCKW, then you need to go to that drop down. But in this case, we are interested in Q73W because the selected tool told us that is the only warrant on tight spreads now, right? Over Sheng Siong. So we want to enter at 275. We enter that here under the target entry variable. Okay, under the target entry underlying price, we enter 275. The date is today. And then the target exit level is $3. right? So we enter it here. And again, what you're going to see is very consistent behavior, same as what you see on the selector tool. Under simulated results, the warrant bid price that you enter at is 1.4 cents when Sheng Siong is at 2.75 today. And then if it went to $3 today, of course, it's going to go up by 57%. So it's going to go up by about 6 to 7 times more than the underlying. But what we're really trying to solve for here is the approximate date we should look at as in terms of our maximum holding period. So the approximate date to exit from the warrant, right? So how do we do that? We go and increase the number of days from today. So earlier we talked about 16 weeks. And in this case, this warrant 2 allows us to go on for longer. 16 weeks, 4 months from today is actually around March, right? So if we go to March, 20th March, for example, you see that the warrant price indeed drops. Well, it still increased from 1.4 cents, but the percentage gain drops to just 14%. Not much gearing. So we want to see what's the maximum date we can push out until. So we keep increasing this date. Okay. And what you're going to see, there you go. By the end of March, okay, 28th of March, this warrant will only make you returns of 7.1% versus Sheng Siong's 9.1%. So do you get gearing anymore? No. Okay, which means you really should aim to get out of the warrant before then. Okay, so you probably want to get out of the warrant maybe, no, it's got to be earlier than that. You want to get out of the warrant around, just now we talked about 21st March. You want to get out of the warrant, I think around, yes, 20th March, okay? That is the date you really should be setting an alarm on to say like, look, if Sheng Siong is no longer at $3, I also have to cut my losses here. Basically, the maximum holding period based on this view of entering Sheng Siong shares at 2.75 and exiting at $3, the maximum holding period is either 16 weeks or around 116 days from today. Okay, and you need to set an alarm on around 20th of March to say you have to exit from the warrant. Why? Because if you don't exit from the warrant, even if Sheng Siong shares went to $3, let's say you decide to hold on to it for longer, you decide to hold on to it until like maybe 3rd of April. 3rd of April is still making some money, but maybe the end of April. Can you see that if you decided to hold on to it for one more month, in this case, not only will you not make as much gains as you would in the shares, right? Earlier we saw it only made 7.1% returns, right, by the end of March. Okay, but if Sheng Siong took another month, another 151 days from today to head to $3, you would actually lose money in this warrant. It would be down 7.1%. So what's the moral of the story? With warrants, you need to be very disciplined in using tools like the calculator tool to solve for the maximum holding period. Meaning if Sheng Siong, whether or not it goes to $3, you should be exiting from this warrant by 20th of March. Of course, that's provided it doesn't hit its cut loss level, right? Joey, remind us again, what would be a possible cut loss level we should be mindful of?
Well, for Sheng Siong, I would say that in terms of the stop loss level, right? So 265 would be what we call, okay, let me do it to share my screen very quickly. I said 265, as I mentioned, would be very, very, I would say, good horizontal support level that we've been holding above over the past 2 weeks. Right, so that will be the horizontal support level. But usually what we do is that we want to give the stock, right, in this case it would be Sheng Siong, the space that accounts for the volatility as well. So normally we wouldn't want to get out, if it just breaks the horizontal support, because it can still be good. It's just natural volatility, and we want to give it a bit more space, and that's where we'll pull out, as I say, the trailing support. So we want to be above these trailing support level, I would say around 2.5. I mean, you can just say maybe 2.55, right? Above 2.55, that is still cool, right? We could head down. It could even be an opportunity as well to get in, right? So anything above 2.55 is still okay. We go below it, we go below 2.55, then not so good. That's where one could potentially think about maybe stopping, stop loss, get out, reduce some exposure, because that's where we would trigger even a bearish signal coming in. All right. So yeah, that would be it.
Okay, so back to my screen then. So in that case, let's say if you know the cut loss, it went above 275, but then couldn't hold up, and it went to around 253, let's say 253, and you decided to cut loss there because the trend has been broken. What you're gonna notice is that even though the warrant is down 72%, which is also magnified losses, right? So it's about or more than 8 times the loss of that you were experiencing Sheng Siong shares. But if you do not learn to cut losses and you held this all the way to expiry, you potentially will get zero back, right? So you need to learn to cut loss, when your view is wrong. And how do we decide when to cut loss? Either with the maximum holding period or any point in time that it goes down to to the cut loss level of 253. In this case, you know, we've talked about the holding period around 112 days. But if Sheng Siong shares came down by 8% from your entry level, in maybe just about a month's time, you really need to be cutting your losses already, okay, at this point earlier. But otherwise, if the stock is just not quite at $3, already at $3, then you need to know that your maximum holding period, you shouldn't be holding on to it. You should exit the minute it hits $3. But if it doesn't hit $3 yet, it's taking some time. You need to tell yourself the maximum time you have by using this warrant is around 115, 116 days from today, and you should be getting out by the 20th of March, right? Because I've showed you examples of how
Yep.
if you continue to hold on to it, you're actually going to end up with further losses, potentially with the scenario of losing all your capital, right? And getting 0% back at expiry. So we don't want that. We want to be very disciplined with a trading product, a listed average product. You need to know and be conscious that the holding cost can eat into the geared returns. And so all of them will have a maximum holding period. The longer you hold, the more you pay, to a point where it's going to eat up all your gains. So you need to be very conscious of that. And once you are, you can be on track towards trading warrants a bit more successfully. And of course, if you wanted to know more, there will be more seminars coming up in 2026. We have one coming out on the 20th of January, and you can sign up here at warrants.com.sg. But if you wanted to know more about Sheng Siong warrants before then, you can give me a call at 6601-0289. It will be me speaking to you at the end of the line. Happy to go through with you the tools again. Hopefully today's explanation was clear, but if it was not for you, then you can always call me for a chat.
All right. Thank you so much, Jamie. I think Jamie mentioned a really, really good point about warrants, right? In terms of it being, like a leverage product, but not just that, but also in terms of time decay as well. So take note, guys, when you buy a warrant, you don't want to just buy and just leave it there and hold it all the way to the expiry. Please don't do that, all right? Because the longer you hold, that's where time decay sets in. That's where the price of the warrant will drop. The value, eventually becomes zero as well. So you want to take note, like what Jamie said, the maximum holding period. So, if it doesn't play out, it doesn't move up, it just stays sideways, or the price is the same, well, you want to be, have a plan to get out as well, all right, because that's where if you just keep holding on to it, all right, your gains will be lesser and lesser. All right, so maybe we have some, should we go and take some questions, Jamie? I mean, like, let's see, I think what are some of the questions.
Sure.
So guys, we have Jamie over here. Yeah, so please ask your questions. Go ahead.
Peter Lai, hello. Thank you for
Yes.
joining again. He is a loyal supporter of our One Good Trade live show, and hopefully, a lot of those ideas we discussed have been quite profitable for you, hopefully via warrants. So Peter's question was, but closing on the 20th of March is still profitable, right? It's still profitable. So why do we say let's get out? Well, because even with Sheng Siong shares going to $3, which is your target exit, going up by 9%, you actually don't have much gearing left. Like in this case, it's not even 2 times more, right? So it's the maximum. Of course, if you wanted, you can push it. Like I said, if you held on to it for another week, it's still profitable. It's still up 7%. But it is already less than if you had traded directly in the shares. The proposition of warrants is you enter it because you want to use it to magnify your returns, right? And also, of course, the other one is the capital outlay is smaller, right? So you use less capital. But if the warrant now is going to make you less gearing, in fact, it's not going to give you an advantage over buying the shares directly, then you really should get out. Because again, if now, in about 123 days, end of March, it's only making you 7%, which is less than if you bought the shares.
Yep.
If you hold on to it just for longer, at some point, it's not even going to make you money anymore, right? So in this case, let's play around with it. Like I said, on the 10th of April, even if your view was right, so you held on to it, you don't want to get out because still 7% still profit as well, right? You're thinking not too bad, but okay, sure. But then if you continue to hold it for another week, in this case, approximately on the 10th of April, you see that the warrant makes you no return at all. So you need to exit before this, right? You need to exit before this. And so the approximate ballpark date will be about 20th of March. Okay, because if you hold on for longer, possibly even if Sheng Siong went up by 9%, you make no money via this warrant because the time decay has eaten up all of the geared returns provided by the warrant. Okay, Peter, I hope that answers your question. Another very good question, Joey, from P Tan.
Yeah, very good. Let's go ahead.
Yeah. The question is, are such warrants the same as those given to shareholders? So for example, I think you quoted an example of a company warrant. Now, very good question, Pitan, because these are structured warrants I'm talking about. They are not company warrants issued directly by the company. Now, what's the difference? Now, the company warrants allow you to still directly participate, right? As a share/warrant holder in the shares, itself. But structured warrants are issued by external third parties such as Macquarie, okay, to track the moves in the shares directly. Okay, and so at the same time, obviously we provide gearing and all that. But the most important difference is the presence of a market maker, right? Such as Macquarie, where we're quoting on both the bid and offer. Now, in the company warrants, you actually will not have a market maker, which means it's free for all. You can only enter and buy if someone was willing to sell the warrant to you. And similarly, you can only sell if someone was willing to buy the warrant back from you. So I think the most important difference is the presence of the market maker. Now, structured warrants are also, like I said, because the presence of the market maker, because it's issued by an external party like Macquarie. So it's not directly related to the shares, but it tracks the moves in the shares, right? So, the if you wanted to know in greater detail of what the difference between the company and structured warrant is, we actually have one of these educational 1-minute videos. Again, back to my website, warrants.com.sg. Under warrant education drop down, there's an educational 1-minute video, and we have a FAQ section that let's try to find it there. The difference between structured and company warrants. I've denoted that one's apple, one's a banana. So same but different. Okay, both are fruits, but different kinds of fruits. So if you wanted to know in greater detail in a very fun way in just 1 minute of your time, I suggest you tune into that short that we have. But essentially, that is the difference for you, P time.
Nice. Okay. Let's see. Any other questions, guys? We have Jamie, expert on warrants here. If you have any questions on warrants, guys, this is the time. Maybe you'll take one or more question. If any of you have any questions, type in the chat.
Peter Lai has just asked another question, Joey. He's just asked, the seminar on the 26th of January, it's called Advanced. Is it suitable for beginners? Yes. Typically, we use these advanced seminars as a follow-up to sessions such as these with Joey, where we have showed you just very quickly given you a preview of how warrants would perform. If you wanted to know in detail how time decay works, how the market maker makes money, how we quote, what are the other tools available? I've talked about Delta earlier, briefly mentioned about it. What exactly is Delta? What Greek is Jamie speaking? I will tell you more about it in the advanced seminar. So Peter, it is for beginner seminars. It's for beginner investors who are interested in the warrant product and want to know a bit more about it.
Nice. Yep. So please go ahead. To register, go to the website. The website is in the chat, guys. So I'm going to register for Jamie's seminar in January, right, next year. I think we have one more question, Jamie. Should we take that?
Yes. So this is by another top question, which I get asked all the time. So this is Chin Jin Long. Hello there. So what's the difference between warrant and options? We just talked about the difference between structured warrants and company warrants. So what is the difference between warrant options? Again, the presence of a market maker, I think it's one of the most important differences. And of course, arguably, some options, such as those listed in Hong Kong on the exchange traded options market, it's also got the presence of a market maker, right? But with structured warrants, what we can tell you, warrants in Singapore listed on the SGX, versus options that you can find over maybe other Singapore shares. Well, those probably don't have the presence of a market maker, right? So like if you want to look for a Sheng Siong option, I'm not even sure if you can find that, but if you could, there will be no market maker there. So you can only enter and exit from a position if there was again the presence of another counterparty, another investor. So that is one of the difference. But of course, the next big difference is options are often transacted over the counter, especially in Singapore over Singapore names, whereas warrants are listed on the SGX, just like your shares. So you can easily get in and out of it. But at the same time, on the SGX, of course, but at the same time, what this means is that you cannot short the warrant as you can short the option, right? So a lot of people short options because they want to receive the premium. So they want to assume the role of the issuer, right? The market maker. But the case of warrants, you cannot do that. They are like your shares. You cannot short it overnight. You can short it intraday, but if you short it overnight, you'll be subject to the buy market, which means the option trading strategies of, long shorting options, selling options to collect premium and all that. And of course, a lot of complicated, option trading strategies like your strangle butterfly, straddle, and all the collar and all that. You cannot use it on warrants. Warrants are really just a means to an end where you use it to trade the directional view. Either you're bullish, you use the call, and then of course you observe the maximum holding period, or you're bearish, you buy the put and you observe the maximum holding period based on the exit levels, the cut loss levels, etc. So you really trade it like shares, but in a very short term, whereby there's a holding period. So you just need to be aware that you cannot hold on to it like shares, right? So the main difference between warrants and options, like I said, you cannot do your long shot as you could on options. Warrants are, in my opinion, a bit more straightforward, a bit more simple. You either long a call or you long a put, with the same criteria as you will observe with options, which is your holding period, your cut loss points, and all that. Okay, again, we have got a 1 minute video for you if you wanted to know about it in a more fun way. We have it the same place, which is our warrant education drop down, where you can find the 1 minute educational videos there, the difference between warrants and options if you wanted to know more.
Yeah, do check out the warrants.com.sg, guys. Right, the link is right in the chat already. Right, so I think pretty much we have come to the end of today's One Good Trade live show. I think no more questions, right, Jamie? Should we end?
No, but since this is the final show, I just want to
Yeah.
say thank you, Joey, for I think
Yeah.
what has been a very successful run in 2025.
Yeah.
Always very excited personally to know your ideas, because I was just looking at all the past videos, and if you don't believe me, the rest of you, you can have a look at our website with all the videos we've had with Joey. And of course, there were some misses, but I would say most of his ideas have been hits within that short period of time that we're looking at. And that's what we're really interested in, right? So hopefully we carry on that successful run into 2026. But before then, we're headed into Christmas and, of course, to the countdown of what has been a very exciting, volatile year in 2025. So I just wanted to say in advance, an early Merry Christmas to all of you and a Happy New Year.
Everyone.
Hopefully we have a very exciting idea to start off 2026 with. But in the meantime, have a look at Sheng Siong. Be aware of the entry and exit levels. If it does break out of 275, you might want to consider using our warrants. And if you want to know more, give me a call at 6601-0289. Visit our website. Be happy to help you. And that's my promise to you, to be your partner when you trade warrants, okay? If you wanted to trade it, of course, you can trade it via Joey. You trade it on a broker account as you would, with shares. All right?
Yeah. Exactly. Right. So you can just buy warrants, guys. Take note that you just need a usual standard trading account. All right. Nothing complicated. This is like a normal Singapore stock. You could do warrants then. All right. So any anything you're not sure about, please feel free to reach out to me. As I say, I think most of you should be my clients in Philip Securities, but in case you're not yet a client of mine in Philip Securities, the link is right in the chat. Check out. As I say, guys, that's where we do share some of those top ideas by WhatsApp daily for free to our clients in Philip Securities. Link in the chat, click on it, find out more, and we look forward to send you some of those top ideas as well once you come on board as a VIP client of mine, right? And no additional cost. All right. Yeah, I think that should be. And maybe one more thing I want to share is that I think what some people would like to know as well would be like, when do you want to know, like, how do you know when to get out? Like, for example, this is the chart on Sheng Siong that I talked about just now before Jamie came in, right? Well, essentially, you can see that we have a couple of bullish signals on Sheng Siong since April, right? Not last week or last month, April, right? About 7-8 months already, right? And what we want to do is that we normally want to maximize our profits as it moves even higher to scale into our winning positions. But if we do see a bearish signal, a red signal, and then not so good, I think you want to get out, take some profit. I mean, like 67%, right? On the underlying, right? The warrants is another level, right? But if you see a bearish signal, you want to know how to get out, right? And if you don't know how to do that, well, quick test drive. You can test drive my one good trend light indicator for free. All right, that comes up with the bullish and bearish signals. A very simple. I would say we're using the pro version, but it's a light version. You can test it out. Link is right in the chat. Check it out. And just want to make sure that I cover that as well, so that you guys can have access to the tools that we are using as well. All right. So anything to add, Jamie, before we end off today's last session for 2025?
No, thank you. Good luck, everyone. Hopefully, the last month, let's make full use of it. Hopefully, again, via warrants to amp up your returns. Okay. We will see you in the next show to recap how Sheng Siong has done. So fingers crossed it all goes well from here.
Okay, take care, everyone. Have a good, happy holidays in December. Bye. We'll see you guys in January for the next One Good Trade live show. Bye. Bye, everyone. Bye.